Hey everyone, welcome back to the Crypto Code. Altcoins feel like they're getting crushed right now, so today we're cutting through the noise to figure out whether they're actually broken for good or whether this is the ugly phase before the next rotation. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice. So do your own research before you make any crypto trades. Okay, so when BTC sits below long-term fair value bands and momentum is deeply oversold, that tends to show up when sentiment is washed out, not during normal pullbacks. And when Bitcoin looks stressed, altcoins look worse. So why does it feel like alts are uniquely wrecked? Three forces explain most of it. First, this cycle got front-run. The four-year script became common knowledge, buy before the halving, then ride the post-halving mania. But when everyone expects the same timeline, demand gets pulled forward. On-chain behavior suggests long-term holders accumulated earlier than usual and then distributed into the institutional hype window. Second, Euphoria arrived early, then disappeared. Participation proxies, activity, fees, and exchange intensity peaked around late 2023 into early 2024. In previous cycles, that kind of footprint often shows up later in the bull. Since then, it's looked more like a grind, fewer new participants, and less appetite for risk. Third, ETFs can lift the safe asset without lifting the risk curve. Bitcoin can trend higher on institution-led allocation. Altcoins typically need retail heat, fresh capital, and speculation. If retail isn't showing up with expendable income, alts can lag even if BTC holds up. So, are altcoins broken beyond repair? No, but the market is splitting and we have to play it differently. Instead of only staring at dollar prices, we watch relative strength. Altcoins versus Bitcoin, especially charts that strip out the megacaps. On those, we've been pressing into resistance since the last bear lows, and momentum has been trying to turn up, but here's the nuance. The first phase of alts gaining strength versus BTC can still happen, while alts and dollars keep bleeding. We've seen cycles where alts based out versus BTC yet still dropped 50% to 70% in fiat terms before the real expansion phase kicked in. A simple macro analogy helps. Inside crypto, BTC behaves like gold and alts behave more like copper. In risk-off, money crowds into the store of value trade. In risk-on, money rotates into growth and beta. So if the world is still heavy with uncertainty, policy friction, geopolitics, tariffs, growth worries, it makes sense that the gold trade holds up better and the copper trade struggles. We also need to respect the bear market angle. Some research voices argue the market has behaved like a bear regime since early 2025. Whether or not that exact date is perfect, the takeaway is consistent. Bottoms usually form through exhaustion, not excitement. That's why it feels so draining right now. So what do? We don't gamble, we get selective. We treat this like a K-shaped split. A smaller group of projects will keep compounding, more users, more real activity, more staying power, while a long tail quietly decays. That means our edge is tracking internal strength while price is ugly, usage, real revenue or fees where applicable, developer traction, and most importantly, dominance. If a project is gaining share while the market bleeds, that's often what separation looks like before price catches up. But if we want a clean turning point checklist, we can say it out loud as 4 signals. 1. Alt BTC breakouts that hold above resistance, not just one-day wicks. 2. Participation returning, rising activity, fees, and volume over weeks, not hours. 3. Leverage flipping from a bearish bleed into constructive speculation. And 4. Catalysts, stacking, regulatory clarity, a broader risk-on shift, and real adoption narratives like infrastructure and real-world assets. Bottom line, altcoins aren't automatically dead, but the everything pumps phase is not something we can assume anymore. Selection matters, risk management matters, and patience matters. Comment below, do we think we're still grinding through a long bear, or are we watching the early setup for the next rotation? Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We've already given away thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.